Hey, buddy. Well, what went wrong today? It's been a while since I've had a day like this, uh, but it happens, right? Uh, Impatience, focusing too much on the shortest time frame chart. Uh, that was really the biggest thing. Uh, just focusing too much on the 1 minute chart, which got me impatient, trying to catch every move. Um, and it was just completely unnecessary. So I margined out of my personal account, lost $310. So once I went under $100, when I was on one contract, it margined me out. And now I have like $92 in my personal account, and I've got to put some money back in to be able to trade it again. Then switched over to my Apex accounts, and just being frustrated over my personal account. It wasn't over trading, it was a complete dumbass error. I was trading MNQ in my personal account. When I switched over to my Apex accounts, I did not double check what product I was on. Thinking I was in MNQ, I was actually in NQ. And the very first trade I put on was 10 contracts because I thought I would be in one mini. I was actually in 10 minis, and price popped and just hit 5,000 negative like that. Um, just, just an idiotic error is all it is. So, um, payday's tonight, so I will be getting some more Apex accounts before the sale ends. We'll probably put another $210 back into my uh, personal account to get it back up to 300. And we will reset the brain. Uh, yeah. And I mean, it was just the dumbest thing because I literally said in the video yesterday that I thought the highest probability because of, well, it's not there anymore. There was an inverted gap right here along with this bullish gap inside the order block, and that was where I was expecting it to hit in the Asian session and bounce, and it did. It actually bounced from the midpoint, 300 points, 320 points, a little bit more, but close enough. Um, Unfortunately, I was sleeping, so uh, not through the whole thing, obviously, but um, I was making some good decisions. Uh, and I had actually made some money. I was up about $60 in my personal account, and that's when once I was up, I stopped. For some reason, I just didn't look at the 15-minute chart. I was focused on the 1 minute, um, which is disaster in the making. You just can't focus on a 1 minute chart with the way I trade. So, um, there were two really good trades to take today. Had I um, been patient, paid attention to the 15-minute chart, and um, traded it instead of the 1 minute chart. So the first one was the fair value gap that was made at the 730 bar up here. in the pre-market. That would have been a perfect entry with just a few ticks or a few points into drawdown. And if we take a really close look at that, when I say it was a perfect trade, if you had set or entered at the midline um, and used the 20-point stop loss, the 20-point stop loss covered the fair value gap and then some. Um, so it would have been a perfect entry, and it would have been an absolutely huge. Watching the 15-minute chart, it gave you no reason to get out of this. Uh, every bar closed red. Uh, and after that big sell or buy wick, after hitting, I believe, what time base? Yeah, the previous day's low, and it bounces off of that with that nice big buy wick. You can get out at the close of that candle, expecting a pullback because that was a very big 15-minute candle. And that trade would have been almost 13 to 1. Uh, on one micro or one mini, you would have risked 400 and you would have come out about $5,000. Um, so, unbelievable trade um, that I missed today. Today should have been just such a moneymaker. It's ridiculous. Uh, and then the next trade, you know, we inverted this 15-minute gap when we came back up into that. So that's not something I'd want to trade. We could come down and then just pop right back up from the inversion, but it did push down, made another fair value gap right here. Um, this one probably would have been a little bit harder to trade. Uh, so there's our midline. If we got in at the midline and we put the NQ template on, uh, yeah, that would have stopped out immediately, but then would have pulled back. Uh, and then if we got in, we could have re-entered that trade after that nice big pullback wick. Let's see, how much would the fair value covering the fair value gap had been? Would have been almost a 37 point uh, trade, which would be under $1,000 a stop loss. So I could deal with that. I can take a 40-point stop, which is $800 drawdown. Um, so probably would have just set that up there at the very, I mean, if I was going to set it above the 89 EMA, I might as well just set it above the gap and have the 40-point stop loss and risk the $800. Um, a little bit wider of a stop loss than I like to have, but you know, it is what it is. And then again, back to the previous low. I think that was that the previous low? No, yes, no, no, that was past it. So it's past that, but it did break time-based liquidity. It did hit the Asian low. So that would have been probably getting out there on a swipe of the Asian low. That is a 5 to 1 trade, but when you're risking $765, 5 to 1 is another $4,200. That would have been a $9,000 day minimum just off those two trades. Uh, so yeah, patience pays. Uh, or you just you gotta pay attention to the 15-minute chart instead of the 1 minute. Oh, it's been such a long time since I had a day like that. and screwed myself up so bad. Um, luckily the only money account I actually traded was my personal brokerage account, which was at 400. I lost $310 on that today. Uh, Not a great feeling, but you know, it's the first time I've opened a live brokerage account, uh, and it is a small account, so um, not completely upset with myself. Uh, I just have to make sure that, you know, once I take a trade, win or lose, I have to reset. Uh, and honestly, I think what I'm going to do is leave all my levels on uh, the 15-minute chart, and I am actually going to remove the 1-minute chart so that I cannot stare at it. This way, all I do is watch the 15, and when I get to a fair value gap or a level, um, then I can switch over to the 1-minute chart. So, like, let's see, you know, those trades would have been were taken. I showed being taken on the 15-minute chart. Let's go take a quick look at the 1-minute chart. This was at 8:30 that this happened, uh, between 8:30 and 8:45. So let's take a quick look at the 1-minute chart between 8:30 and 8:45 and see if we can identify that entry. Uh, where are we at? The second. Okay. Between 8:30 and 8:45. I'm just going to hide the session volume profile so we can see it a little better. 8:30 and 8:45. Okay, so 8:30 and 8:45. This is when that happened. We'll widen this out a bit. Okay. Where could we have entered that trade? Well, we did not have, uh, well, yeah, we did. Okay. So once we hit uh, the midpoint, we had the pullback, and then this candle started moving down. Now, I may have entered this trade before the candle closed on that much strength of a can bearish engulfing, knowing that we just had a wick off of the halfway point. Um, so, once we got down past these couple of lows here, and here's a very small fair value gap right here. So probably somewhere in here, I would have entered the trade. Um, and if we did that and we put our 20-point template up, uh, that pretty much covers the fair value gap. It certainly covers the high, the previous high. Um, and that would have been an absolutely beautiful trade. It would have come back, put us in a small drawdown, and then off she went, all the way down to previous day's low or VWAP. Um, Probably would have been looking to take that pretty much off at VWAP for a 4.49 to 1 trade. Um, sure. Oh, yeah. So if we waited for confirmation, that's what we were looking at. If we had moved this up to here and covered just the fair value gap, that would be a 9-point stop loss. um, so yeah, that would have been. Would have been perfect. Probably could have got a little bit tighter of a stop loss. Well, really, no. Uh, You couldn't have. The midline was right. We would have entered on the 5 minute candle. Still would have had to cover the gap. Probably would have even had to cover that full 5 minute gap. This works. You know, again, if we wait for confirmation, we're in somewhere down in here, jumping in just on the strength of the candle, willing to risk uh, back above that high at 15 points. So, which is a little less than $400. Really happy with that risk. And, you know, looking at it, uh, at where you're looking to take, I at least have a 3-to-1 trade here. Okay. And if I pull that up to the weekly support pivot, I'm still getting more than 2-to-1. So happy with that. I would have taken that trade, uh, and probably would have risked giving some of it back because we made a fair value gap through the daily. So definitely would have risked that coming back up, probably to break even, but it didn't. And we did get that trade all the way down to VWAP. So that works. Um, I'm really, really wanting to start entering these things at, you know, midline of the fair value gaps. Uh, it reduces the risk. 10 points would be $200 on one contract. Uh, and once we make this fair value gap, boom, it pops back up into it. We can add to the trade there. Uh, and from here to there, that would put our average right about there. We can almost break even before we fell off. Gap again, pull back up into it, add to the trade. Now you're in 3 contracts, and holy shit. Um, you get your flush right back down to V1 on 3 contracts from here to here. It would have been huge. Probably a $10,000 trade. Um, if we look at the next one, which was not this, because I mean, I'd have a hard time not taking this trade, just because we showed strength through all of this. The only hesitation I would have, well, no, not even that, because we busted right back through VWAP and then we come through VWAP again. One, we had a really strong reversal here. Um, and that's why this trade would have been so much bigger, because you show strength down to VWAP, it pops up, it sweeps the high, and just like, takes off again all the way down to previous day's low. And if you're holding 3 contracts, or you take off a couple of contracts at VWAP, hold one contract. Um, as soon as that thing breaks this low, breaks VWAP, breaks the low, shows strength, uh, absolutely could add when it pops up to here, right below the daily. If it breaks back above the daily, then you can look at getting out at whatever profit you have at the moment, um, and you flush right back through. So fantastic trade. We had a big V reversal, which would have really bothered me to take this trade. Um, think the one reason I would have to take the trade though is, we show resistance at the weekly, we show resistance at the daily. After these big sell wicks, once we pop back up there and we can't break that high, uh, and then we come down and we break the low and create a fair value gap, I literally would get in at this candle right here, um, close, expecting it to come in and tap that gap, but it never does. It just falls off. Uh, and then we create another fair value gap, which we come back up uh, and tap into. And if we're entering at the 50% mark of the gap, we get in on that candle right there. If we're going to cover the gap, that is a 40-point stop loss, which I wouldn't mind risking that $800 with the profit we made from the first trade, possibly the second trade if we took it. And this one just uh, goes straight through uh, the previous day's low. And I probably would have taken most of my profit off right there at the daily pivot point. Uh, and we're not leaving much on the table here. Okay? I mean, that's a 6-to-1 trade. This is an absolutely stupid 27-to-1 trade. And if we did take this one here, uh, I said, close of that candle would be good. Holding that gap and the weekly support would be a 20-point stop loss. Perfectly okay with that. That's $400. Uh, and we bring that down to current open. That's a 6-to-1 trade. Jesus. I mean, you know, and if you were really good and you see that we couldn't displace through the previous day's low here, um, as soon as you close above all of these wicks right here, that's, I mean, that's an entry in and of itself. Let's just say you even take it here, you put your 20-point stop loss on, that gets you, the retest of the previous close if it wants to pull back, and holy moly, up to the high is another 7-to-1 trade. This is just ridiculous. I mean, the money that could have been made today is just well, okay. See, that's what I'm doing again. Okay. This trade would not have been taken uh, simply because it was not a 15-minute fair value gap that got hit. This trade would not have been taken. These two trades are 15-minute fair value gaps. See what I do? I look at that 1-minute chart and go, damn, you could have done this. Damn, you could have done that. I can't, we can't think like that as traders. Um, the two trades were off of 15-minute fair value gaps, and one of them was a ridiculous 20, almost 28-to-1 trade. And then the next one was a 6-to-1 trade. And those were good setups. 15-minute fair value gaps, getting hit and holding um, for really nice moves. So, all right. The day that could have been, but no, was nowhere fucking close. So, um, I'll be back on tomorrow. Uh, it's going to be Friday. We've got non-farm payroll tomorrow. Uh, I'm pretty sure. It's factory. It's today. Friday. No, we don't. That is next Wednesday. So next week's going to be pretty neat. We got jolts. Um, we got non-farm payroll. Uh, FOMC meeting minutes, which guessing that was from the last meeting. So that, I don't know. We'll see. And then unemployment claims on Thursday. So Tuesday, Wednesday, and Thursday, we got all kinds of stuff. And then Friday, uh, yeah. Ooh, PPI comes out the week after CPI. Well, it's going to be a fun week too. Oh, volatility in the markets, baby. All right. So we got a lot of big news coming up next week, which should be fun. And then the week after, uh, CPI numbers. So the next 2 weeks should have some volatility in it. Um, and we just need to be patient and wait for our spots. So that is it for today. Was not a good day trading wise for me. I hope everybody else made money. If you didn't, join the club. You know, at least they were Apex evals that I only paid $17 for. Um, and, you know, first shot at a personal brokerage account uh, chalked up as a fail. We're not going to give up. We just have to be patient, watch our spots. That's twice this week. The first time I did it, it really did cost me. I got into some drawdown. That was about it. But uh, today, it cost me 10 accounts with Apex and my personal brokerage account. So it is what it is. We move on and we keep grinding. So we'll see whoever shows up in the live tomorrow. I will be on from about midnight New York time uh, for the midnight open, uh, all the way through London session and New York's morning session. I do have a delivery at 6 a.m. in the morning, so hopefully I will be done out of there and parked somewhere by the time the uh, New York market opens. If not, I'll get parked as soon as I can and we'll trade. So take care, everybody. See you tomorrow.